Okay, everyone, just a quick sound check and then we get started as quickly as we can. We are late, so we'll go through things really quickly. But just to let me know if there's any issues with audio. Hopefully there's nothing wrong with audio. Seems to be good on our side. Lakesh, what's my prediction on the CPI? Well, we did some calculation and there's a probability that the CPI could come in actually a little bit higher than consensus. But we'll see. Obviously, anything can go tonight. It could be lower, it could be higher, but right now we do have several indications. It might come in a little bit higher, but we'll go through that on the calendar. All right, so everyone, welcome back. This is news trading session number 3. This is inflation CPI. We are going to be trading CPI numbers live tonight. We only have about 23 minutes to go through a lot of stuff in here, but let me just go through this very quickly. My name is Fido Hinjodo, and then we can get started with a quick disclaimer. Any opinion, news, research, price analysis, or other information discussed in this webinar or link to this presentation is provided as a general market commentary and do not constitute investment advice. All right, so there are a couple bonuses that you can use. We'll do the promo code at the end of the session, but you should be receiving your email to the private Telegram channel if you register through the website. All right, so we're going to talk about what inflation is, what consumer price index is, what are the core inflation, and, we're obviously going to be doing live CPI trades in 23 minutes. We need to get this done as soon as we can. We probably only have about, at best, 15-20 minutes tops, and then we need to set up our positions, all right? All right, so what inflation is? Inflation is the rate at which prices for goods and services rise. Most commonly used inflation indexes are the consumer price index and the core inflation. They're basically one and the same. It's just that there are several things that got taken out for the core inflation numbers. This is not the only inflation indicators that we have. We have the PPI, which is going to get released tomorrow, I believe, just right before the FOMC announced their statement tomorrow. And then we have the personal consumption expenditure as well. Those are going to be an indication for inflation. So CPI is a critical indicator of pricing pressures in an economy. It provides a gauge of inflation. Forex traders monitor the CPI that can lead to changes in monetary policy by the central bank that will either strengthen or weaken the currency against the rivals in the market. So we'll talk about that later on. But let's take a look about the difference between CPI and PPI. Basically come hand in hand. So focus is a lot more on the CPI because that's really what we measure inflation with. So if we say inflation, it's always that headline CPI. If we say headline inflation, it's always the year-on-year CPI numbers, and that's basically the focus. There's going to be 4 data that's going to get released today. We've got the month-on-month CPI, month-on-month core CPI, year-on-year CPI, year-on-year core CPI. We're going to focus on 2 year-on-year CPI and the year-on-year core CPI numbers first, and then as the results comes in, we'll take a second consideration on the monthly numbers. All right. So CPI measures the cost of living, includes broad range of goods and services purchased by consumer, includes international personal consumption items. Scope excludes changes in interest rate or costs. The PPI is more on the producer side, right? CPI is the consumer side. PPI measures real growth and output, include items produced for personal consumption, does not include imports, encompasses services with prices, including an interest rate component to it. Okay, so those are the difference between CPI and PPI. So what are the core inflation numbers? So the core inflation refers to the change in price of goods and services, excluding those from fresh foods and energy sectors. So it's basically CPI, but you take away the more volatile factors in it, like energy prices. We take away energy prices. We take away fresh food prices. All other foods are still going to be there. So if we talk about biscuits, packed foods, it's still going to be included in the core CPI. But fresh foods are typically excluded from the core CPI. So the core CPI it kind of reflects the underlying inflation, right? So the headline inflation could come down, but if the core CPI doesn't come down, then we know that the inflation is still there. It is, it's still affecting a lot of the stuff there because, take away energy prices, that causes a lot of volatility. Take away, the cost of fresh foods. If it still causes a high inflation, then the inflation is still there, despite the headline inflation coming down. I'll talk more about that later on. All right. So these items are excluded from this measure of inflation because their prices are more volatile. Typically, core inflation is determined using the CPI, obviously. So CPI excluding fresh foods and oil, typically energies. All right, so let's take a look at the economic calendars, and I'll explain a few stuff on what could happen for tonight. So we will focus on the inflation rate, right? Previous one was 4.9. The expected drop is 4.1%. Now, if we take a look at the consensus and the forecast, consensus and forecast ranges from 4.1 to 4.3%. I've been talking to some traders and analysts today as well. We basically come to a conclusion that we might actually see a little bit of a higher inflation number. Not high as in it's like 5% or anything like that. It will still drop. I think it will still drop, but it might not reach 4.1%. I think it could come in at 4.5%. So that's scenario number one. If the inflation comes in at 4.5%, that is still going to be higher than what the consensus is in the market. And that's still going to be a boost for the US dollar, because this is going to be the final consideration for what the FOMC is going to be doing this week, which is tomorrow, actually, right? If the FOMC decides to hike interest rate tomorrow, that would be because the inflation today is still high. All right, so that would be the consideration. If it meets consensus at 4.1%, then there is a higher probability that the FOMC would actually pause interest rate hike. They're not going to hike in June. They will probably still come up with a little bit more of a hawkish economic projections. I think there's still going to be room for interest rate hikes this year. But it really depends on this current data that we have right now, whether or not the CPI number is going to meet consensus at 4.1%. This is a huge drop. Now, if we take a look at the previous numbers that we have, the drop was kind of pretty quick, right? So we got 6.4 coming into January, and then it drops to 6, and then from 6 to 5, and then last month it was only 5 to 4.9%. Now, with the core inflation number, if we take a look at the core inflation number, the expected drop is 5.5 to 5.3%. What if the core inflation stays at 5.5%? If the headline inflation drops down, for example, 4.9, it meets consensus at 4.1%, but the core inflation remains at 5.5%, that means the underlying inflation is still sticky, right? It's still high for the US. The FOMC might take that into consideration and say, you know what, headline inflation has come down, but the core inflation doesn't want to go down, so I think we still need to hike rates, right? So that could be one scenario as well. So I'm going to give you 3 scenarios. I think we have time, so don't worry about it. I might go through things a lot quicker, but you guys can replay it if you want, but I'm going to go through several scenarios that could happen. Scenario number 1 is that everything meets consensus. So we've got headline inflation, which is the inflation rate year on year. That's year on year CPI numbers, dropping from 4.9% to 4.1%. If we get that number, and then the core inflation also drops from 5.5 to 5.3%, then we're likely going to see a weaker US dollar, all right? Because the market is gonna think, all right, this is good. Inflation has come down. FOMC or the Fed is on the right track, and they will skip June, right? That would be one consideration. Scenario number 2, we get headline inflation that still drops, but it is higher than consensus. Now, what we mean by higher than consensus, if we get 4.2%, it's not that much of a big deal. But anything above 4.3%, that's going to be a big deal. So if the inflation drops down from 4.9 to 4.5%, it is still a drop in inflation, but it is higher than what the consensus is. So the inflation doesn't drop as much as what the market has been pricing in, okay? So that could mean it might boost the US dollar itself, okay? And if the core inflation rate drops down, but it didn't drop down to 5.3%, let's say it dropped down to 5.4%, that's also another case for a stronger US dollar, because then everyone is starting to think, you know what, I think the Fed is going to look at this and say, hey, you know what, we got time to move in the interest rate, so we got room because the inflation is not coming off as quickly as what the market is expecting, and that would give the Fed the room to hike potentially a surprise hike in June. Right now, the market is pricing in for about 60% skip in the month of June. So tomorrow, about 60% of the consensus is that the Fed is not going to be hiking interest rate. Okay, so those are two scenarios. Now, scenario number 3 is that we might have the inflation rate, the headline inflation, dropping down below 4%, but the core inflation stay at 5.5%, for example, right? What does that mean? It could potentially mean that the initial market reaction would be for a weaker US dollar, but then once everything comes down and they look at the core inflation number, it's still high. We might actually see a little bit of a reversal going on in the market. So there's only going to be 3 scenarios tonight. Number 1, we get a number that meets consensus, then we expect a weaker US dollar. If we get a number that's higher than consensus, even though it's a drop, if it's still higher than consensus, and I gave you the limits, anything above 4.3% on that drop would indicate a potential for a strong US dollar. The other one is that we might actually see an initial drop in the US dollar. So we might see the pound USD, Euro USD goes up, and then everyone look at the core CPI and it says, oh, you know what, inflation is still high. The core inflation is not coming down. We might see the market reverse. So tonight, it's going to be very different from what we did with the NFP, right? Typically with the NFP, we see a little bit of a fade going on into the market. With the CPI number, this is going to be something that is so very similar to what we discussed yesterday. So we actually see that accumulation phase going on right now, which is good. All right, we want to focus on the currencies or any assets that has that accumulation phase. There are some that's being excluded, like the Aussies, for example. They're not within an accumulation phase at this point in time, so we are going to exclude that. The dollar Swiss is going to get excluded as well, which I'll go through the charts soon, because they're not in that accumulation phase. So with the CPI, typically it goes in one direction. Hopefully we don't get any whipsaws, right? But it could happen. What I mean by whipsaws is that market could go one direction and then immediately reverse the other direction. So it could take out your stop loss and then go back to the initial direction. Hopefully we don't see that. If there's no confusion in the numbers that came out, if it missed consensus or if it's higher than consensus, we get that straightforward movement in the market. But if we get a mismatch in the data that we have, then we might see that little bit of a whipsaw going on. All right, the next data set that we are going to be looking at is the inflation rate month-of-month number, the CPI month-of-month. All right, expectation is 0.4% to 0.2%. Core inflation month-of-month is expected to remain stable at 0.4%. This one doesn't really matter. We really want to look at the year-on-year number first. Okay. All right, gold's going to get excluded. It's not that I'm being picky here, but let me go through some of the key levels that we have. So we have the consolidation phase that we are looking at right now. This is actually forming a little bit of an ascending triangle for the pound USD itself, but we don't care. We're going to take a look at this and say, you know what, this is within a triangle that we are looking at right now. I just got the lead on that. We are going to give it a little bit of a room here. The upper side it's going to be 1.2575. Lower side will be 1.2550. We're not going to place our orders just yet. We are going to do that in about 5 minutes time, just 5 minutes before the CPI number gets released. We're going to place our orders just in case there's still going to be a little bit of a fluctuations going on before that CPI number. But this is the current range for the pound USD. It is pretty reasonable. We're looking at about 15 pips of range, but again, as I say, this is starting to form a little bit more of an ascending triangle on the pound USD. So if we take a look at it, if it breaks 1.2575, then it might scream a lot higher. Then we might see a little bit of a continuation to the upside. We are looking at a 15-minute time frame. We're not going to be looking at any other time frame. 5 minutes is too quick. We're not going to be looking at the range properly. The hourly time frame is going to be a little bit too late if we are trading the news for tonight. Okay, so excuse me. So for this one, I think we can start placing our orders for the pound USD. You really want to have your sell stop just below the 1.2550 level. We're We're not placing our buy stop yet because it's still close to that upper range. This one here might get adjusted just before the news releases, but we're gonna leave it there. This time around, you don't want to have your sell stop or buy stop exactly at the low, at the high. You don't have to worry too much about CPI number because it will push the currencies in a significant way. The last month's number for the pound USD and the euro USD, I think we're looking at about 70 pips of movement in the first 50 minutes in one direction. So you don't have to put your order too close to the low or the accumulation part of things, right? So we know this is range bound. We got our borders, we got our roof, we got our support. We're just gonna place it outside of that. Okay. Next up is the euro USD. This one here needs a little bit of an adjustment, right? A little bit lower here. We're gonna place our buy stop just in case, just slightly above 1.0810, right? Should give it enough room. But it is what we want. Okay, we want to have it just above that level. We're not going to place our sell stop just yet. We're just going to calmly place what we have. With the euro yen, this one here, you need to give it a little bit more room. You can have your buy stop just up there, but we are not going to place our sell stop here. We might not. We need to adjust this to this low here just in case, right? With the dollar Japanese yen as well, we need to make some adjustments as well. We are going to shift it down to here for our sell stop. I'm going to get rid of this one here. Okay, with the yen crosses, you're going to give it a little bit more room. With the dollar Japanese yen, I think it's okay to create a buy stop just right over there, about 139.67. Sterling yen is stable, and I like this one a lot. This one here, I'm actually going to give it a little bit more room to go because this one is pretty volatile. So sell stop is about 175. Very happy with that. You just give it a little bit more room. We're not going to place our buy stop yet until we get closer to the event. With gold, there's a huge risk involved in trading gold at this point in time because if we take a look at the range here, it is pretty significant. We're looking at about $6, $7 off range. So if you do want to trade the CPI on a breakout for gold, your range is actually going to be pretty big. So I'm not gonna do that, just not for experimental reason, because I'm actually trading this as well on my other accounts, which is off screen. But yeah, I'm not gonna be trading gold. We don't have time to focus on gold. On Aussie, this one here is a pennant. At this point in time, it is very similar to a very symmetrical triangle, so we're actually going to skip this one. But if you do want to trade the Aussie, then the range is still going to be about 67.85. Sorry, 67.85, and we are going to take about 67.67. It's an okay range if you want to, but I'm actually not going to be trading the Aussie. The Aussie yen as well. If you want to trade the Aussie yen, feel free. There are range established here that you can actually use. Obviously, you got about 94.40 for the Aussie Japanese yen. I think you can actually place the buy stop and the sell stop. Buy stop, yes. Sell stop, leave it until closer to the event. All right. Okay, let me go through the chat as soon as I can. By the way, dollar Swiss, you cannot. If you want to trade the dollar Swiss, just be a little bit more careful with the dollar Swiss because we don't have enough accumulation phase on the dollar Swiss, but the range is pretty small if you want to. And I just don't trade the dollar Swiss because it's really not my cup of tea. The dollar Canadian as well, if you want to trade it, you can trade it. But in terms of range, we're still going to be looking at the much bigger range for the dollar Canadian. We're still going to be looking at that and at around there. So between 86 to 30, so about 50 pips on the dollar CAD, which is really huge, right? Okay. Let me go through the questions. Yeah, smash a like, guys, if you can. Bullish or bearish? I'm not sure. I gave you 3 scenarios on what the CPI number is, and with fundamentals, you know, I never make assumptions. I just go with whatever. Could CPI give 150 pips move depending on what you're trading? Really depends. Bearish or bullish at this point in time for the pound USD is actually really flat. There was a note that got posted out this morning in terms of where the pound USD is going to be. It is actually stuck between daily pivot and resistance 1. All right. Gold, selling in. All right, bullish, bearish, Aussie USD, we got Aussie USD. Yeah, we got Aussie USD. The range is there established, but I'm not into the Aussie USD at this point in time. Already placed trade at 1965 to sell. Should you close? I don't know. That's really up to you. If you have a position right now, if you guys have any running positions at this point in time, make sure that you have your stop loss in place, because this is a risky event. This is a huge risk event, so I need you guys to be smart about this. I need you guys to be very careful about this. Okay, all right, so just give me 1 second. I'm just making some position adjustment as well on my side. Okay, all right, just give me 1 second. All right, so we place your stop orders, right? We want to place it right about now for at least the everything else. If you want it safe, then just trade the majors. You don't need to trade the yen crosses, because the yen cross is not really for everyone. Okay, market's starting to move. I think we should start placing our orders in. This one needs to get adjusted a little bit higher, so we are gonna have our buy stop over there just slightly higher. All right, any minute now, but we'll see. By the way, with the yen crosses, they are right now linked positively to the US dollar yen, right? So if you're trading the euro yen and the sterling yen, they're gonna go in the same direction as the dollar Japanese yen. So just keep that in mind if you're placing your orders. They might go in a different direction to what the euro USD might do, right? So just be mindful. And again, as per usual, we need to close our other positions if any of the sell stops get triggered, right? So this one here, this one has a lot of room. We're gonna give the yen crosses a little bit more room to go. All right, so sell stop and buy stop are being placed as we speak right now. So sterling yen over there. So we're gonna focus on this 5. We got the pound USD, euro USD, right? Euro yen, dollar yen, and sterling yen. Numbers gonna get released anytime soon. Okay, so I'm actually not going to be looking at this. We'll be looking at the chart, because we need to be quick. We need to cancel our any orders that we have that kind of goes the opposite direction. Okay, ready? Any minute, any second. Okay. Ooh, what are we gonna get? What are we gonna get? Okay, pound USD is quiet, good. Euro USD starting to move. The yen crosses are starting to move. But yeah, we gave enough room for the yen crosses. I think number is out. I think some of the orders are hit. Let's see what's going on here. All right, orders are getting hit. It's inflation rate, it's at 4%, which is below consensus. Core inflation is at 5.3%. So yeah, orders are actually getting hit. We actually got hit by a whipsaw in the market. I think if we don't have enough time on to close the other orders, the buy and sell orders are actually locked in right now. So we need to make a decision on this one here. So need to get rid of some positions. The dollar yen, we need to get rid of the dollar yen buy. I hate it when we get locked like that. It just doesn't have enough reaction time in the market to. We got a whipsaw, so both orders get taken out, and obviously this is going to be a risk in the market as well, but it is what it is. So I think we should get rid of our sell position. on this is not something I expected, but anyway, we've got dollar yen. Okay, am I crashing here? All right, are we live? Okay. I think the platform just crashed. So let's restart this. Okay, we need to make a decision right now because we are locked up. All our orders got hit, except for sterling yen and pound USD, so we can get rid of that. Right now, this is locked, so we need to make a decision right now on what to do. I think we are actually going to get rid of the dollar yen. Let's take a look at the reaction in the market. I think the biggest one is going to be dollar yen. So we're actually going to get rid of dollar yen, long dollar yen. We are going to keep the long pound USD, long sterling yen. We are going to get rid of the sell on the euro USD. We are going to keep sell on the euro yen at this point in time. We might get rid of the long in euro yen. All right, so I'm actually having issues right now. I think the platform is kind of crashing on me, but just get rid of your positions if you can. From the numbers that we have right now, this is much better than what I guess what the market is. So we, with the expectation tomorrow, I think the FOMC needs to pause for that because if you take a look at all the inflation numbers here, it is all coming down except for the monthly core inflation number. So inflation number year on year, it is at 4%. The core inflation year on year is at 5.3%. All right, so let me just make some adjustments on my side. I just need to get rid of the buy dollar Japanese yen. I need to get rid of the buy euro yen, buy sterling yen. All right, euro USD buy, pound USD buy. That's good. Sell sterling yen, euro yen. So need to get rid of my short on euro USD. Okay. So, okay, this is great. So we're good. We got rid of some of our positions. This is a strong indication that the US dollar could actually weaken, so we might actually focus a little bit more on the dollar Japanese yen. So far, all the indications are pointing to a potential pause from the FOMC tomorrow. We've got an inflation rate that drops down below consensus, which is surprising. Core inflation rate that is as per consensus at 5.3%. Monthly inflation rate lower than consensus at 0.1%. Core inflation rate month on month at 0.4%. All right, so we've got positions running at this point in time. Okay, platform is a little bit finicky on my side. Let me just restart that. Okay, good. We're back. So yeah, you know, things like this could happen. You know, we get the whipsaws, which just gonna take both sides of our sub orders. We basically just need to make a decision on what to do with the positions that we have, right? If we have it locked up, we don't release any of the positions, then obviously that's not going to do us any good. So we need to make the decision based on what the data has shown us. It should be one way following the whipsaw. So we anticipate a weaker US dollar at this point in time. That's basically what it is that we are anticipating. In terms of how far of a target that you want to go for, really depends. If we take a look at the pound USD, for example, right? So this one here has surpassed resistance 1. The next stop for this one is obviously about 127.2% at 1.2640. So I think this is good at this point in time. It's just that what happened with the whipsaw, we just got locked. So we lose a lot of the momentum. We lose a lot of the potentials that we have just now. But it wasn't a surprisingly huge jump in terms of range, but it did manage to take away 1.26 on the pound USD. So this one here could track a little bit higher. On the Euro USD, again, very similar situation. We surpassed R1 at this point in time. We need to be a little bit more careful for the Euro USD. 1.0825 should be a little bit of a barrier, but main focus would be at 1.0850. So if you have long positions on the Euro USD, you can either take it out now if you are in profit, or you can get rid of that position if you want to. All right. Gold should be shooting up sky high right now. So I think gold should be shooting up. But yeah, gold's crazy. Dropped down 1950, 1970, $20 in an hour. So this is why we exclude gold in what we were looking at today. The Euro USD in terms of target levels, you got your 1.0825 to watch out for, and then 1.0850. And then for the dollar Japanese yen, we got a little bit of a floor at 139. But I think with what it is right now, I think we are going to track lower. We're going to be looking at 138.75, potentially towards 138.50 on the dollar Japanese yen. I think we have enough momentum for that on the early time frame to do so. Okay, the sterling yen, expect this one to follow the dollar yen as well. I'm probably not going to go down as crazy because we're going to get some pushback from the pound USD as well. But the yen crosses are currently in line with the dollar Japanese yen. So the driver is going to be the dollar Japanese yen for the yen crosses. We're just expecting the momentum to become a little bit overbought at this point in time for the yen crosses, and then they're going to follow suit. So for the euro yen, we anticipate a return towards 150. For sterling yen, we are anticipating a return towards 174.50 once it breaks 75, and then potentially towards 174 as well. But that's pretty much it in terms of what we have. We got locked just now. This was probably the worst case scenario that we could potentially see, where we actually got our buy stop and sell stop triggered. And we basically need to make a decision at this point in time. So we missed out a lot on the initial momentum that we see in the market. But it is what it is for the CPI number. We saw a lot of whipsaws. Why are we seeing a lot of whipsaws going on in the market? Because market was adjusting the positions, number one, or number two, a lot of stops get triggered as well. The number that we have is really a surprise. We don't really expect a 4% number. Okay, we were expecting a little bit of a higher number than 4.1%, but it is what it is. We've got trades running. We've got Aussie yen long, Euro yen long. I need to close my Euro yen. This one here is still locked. This is not going to go anywhere. I need to make a decision on the Euro yen. All right, I will actually get rid of the Euro yen buy because that's the closest one with the minimum amount of losses. We got sterling yen long. Okay, sell didn't get triggered on the sterling yen, or did I close it wrong? But okay, that's good. Got pound USD long. I've got dollar yen short. All right, so those are the positions that we have. Then the Aussie yen, we need to go short for the Aussie yen instead of going long for the Aussie yen. Okay, I don't know what's going on, but the platform is crashing on me again. But so hopefully that doesn't happen to you guys. Maybe because I have a lot of things open up right now. It's just causing a lot of stress right now on the PC, I guess. All right. So this is the promo code that we are going to use. This is going to double your deposit bonus as non-farm 2023. In terms of the validity of the promo code, it should still be valid. It states 17th of May here, but I didn't get any new information on the validity of the promo code, so it should still be valid. NorFarm 2023, those are going to be your promo code. Okay? All right, so any questions while I'm reloading the platform again? I'm not sure what's going on, but it just keeps crashing on me for today. Okay, so you're gonna see a little bit of a pull and push here on the market, just because everyone's just gonna adjust their positions at this point in time. In terms of the sentiment, it might soon improve, but it is what it is right now for the pound USD. We are looking at initial markets coming down right now. It's totally fine. This is the first 50 minutes of the market. It's completely fine. We might see a little bit of profit taking, but as long as we are right in what we have. I don't like Aussie yen long. Euro yen short, yeah, I like that. Euro USD, right? Pound yen, I would actually prefer to go short on pound yen, so I'm going to close pound yen. I'm going to open one manually right now on pound yen. Okay. Pound USD long, I'm pretty okay with pound USD long. Okay. Alright, so initial market reaction should be fading away right now. It's just that we cannot really trade the fade. In terms of limit orders, obviously, we don't have enough reaction time for that. Okay, so for the sterling yen itself, it's actually really interesting. If you have your sell order at 175, it's actually not triggered yet. So I think this one here is still going to be a good opportunity. If we're looking at the dollar yen to be weaker, then we do expect all the yen crosses to come along with it. So we do expect pressure to come in on the euro yen, the sterling yen, as well as the Aussie yen. I don't like the Aussie yen at this point in time, so I'm actually not gonna include the Aussie yen. I don't trade the Aussie USD as well. The dollar Swiss got pressured, break to the downside. This is in line with what we expect for a weaker US dollar. But yeah, if you guys want to trade the US 30 as well, you could actually trade the US 30. How about Bitcoin? Let's see what we have about Bitcoin. Shouldn't be affected by the CPI numbers. In all honesty, there's no correlation at all. It's not supposed to be correlated at all for Bitcoin, right? Dow Jones, I think we should anticipate a little bit more of a break to the upside for the Dow today. So I think we should see a little bit of a positive vibe for Dow. Let's take a look at Bitcoin, because there's a request for Bitcoin. I don't really see that correlation on Bitcoin. We see that volatility happen on Bitcoin, but it shouldn't have that much of an impact on Bitcoin at this point in time. Because, again, look, it's supposed to be independent from what the FOMC is going to be doing. So I don't think that's going to be the driver for crypto. Yeah. What will the FOMC be up to now? I think with the numbers that we have, they will skip interest rate. Tomorrow, I don't think we're going to be expecting an interest rate hike from the FOMC. The inflation, it's pretty low, so I think they're going to pause tomorrow. But they're still going to come up with a new economic projections. That's going to come with a new interest rate projections. Again, what we anticipate tomorrow, it's really more on the economic projections. We really want to see how hawkish the FOMC is going to be. It's not that they're going to be hiking rates tomorrow. They're not. I don't think they're going to be hiking rates tomorrow, but they might come in with a new interest rate target projections. Right now, I think a lot of the analysts out here are anticipating 2 more interest rate hikes in 2023. So we expect an adjustment to 50 basis points for the interest rate projections. But yeah, I don't think they're going to be, I don't think they're going to be hiking interest rates tomorrow. All right, let me go through the chat here if there's anything at all. All orders get hit. Yeah, it's whippy. I guess. So it is the worst case scenario that we could see happen today. You know, all of our orders get hit, and then we have to manually make an adjustment. Otherwise, they're going to be locked in. You know, at a potential loss because it takes the bottom and the top. So yeah, we need to let go. Where do we put our stop loss on the pound USD? If you have a long position on the pound USD, your stop loss is actually going to be about this low here, which is at about 1.2550. If you want to have your stop loss for pound USD, okay. Right now, it's safe to place your stop losses. So if you want to have your stop losses right now, you can start placing your stop losses. For pound USD, you really want to have it just about there, very close to 1.2550. For the Euro USD, you want to have it at that low of that wick there. So maybe a little bit lower, about 1.0775 for the Euro USD. That should be enough room for the pound USD and the Euro USD. For the dollar Japanese yen, this one here is still a little bit whippy, right? This one in terms of stop losses is actually pretty far. We're looking at about 140. That's 100 pips. So it is what it is. So be very careful with the yen crosses. This is not everyone's cup of tea. So be very careful. If you're not comfortable with that kind of risk, you might want to just close out of your position right now while price is not really running at all, right? For the sterling yen as well, the very similar situation with the sterling yen, your stop loss is going to be at 176. Unfortunately, it is going to be above 176, about 80 pips, 100 pips. But again, we're looking at a potential return towards 174.50, 175. So from a risk to reward ratio, it should make a little bit more sense, right? We're going to be targeting 174. About 1 to 1.5. I think it's all right, but it's still going to be about 80 pips of risk for sterling yen. All right, Euro yen. This one here, I might think about, if it's not coming down really quickly, I might actually need to close out on the Euro yen. But I anticipate this one to come down really quickly. Once price gets to about 150, you should be moving your stop loss to your break even or your entry level on the Euro yen. All right, but we make our decisions on some of the trade. We let go of the long positions. We made some adjustments. All we can do right now is just let it trade, let it run. But in terms of stop losses, if you're thinking on stop losses for Euro yen, your initial target is going to be 150, obviously, but your stop loss is also going to be about 151. So this one here is still all right. It's about 50 pips up and down. The dollar yen is the one that's crazy. Because if we take a look at the dollar yen, we're looking at about 100 pips of stop loss, which is very significant. But yeah, it is what it is. All right, let me go through the chart, see if there's anything. What should swing traders watch out for after this news? Or what should we watch out for as a swing trader is that we should anticipate the dollar to continue to weaken, as with the FOMC expected to not hike. It's just that we don't know what the economic projections is. I think that's the wild card, I guess, tomorrow. It's not really the interest rate hike. I don't think we're going to be looking at an interest rate hike coming up from the FOMC tomorrow. But the economic projections, we want to see what kind of interest rate target that the FOMC is going to give the market this year. Is it going to be 50 basis points? Is it going to be 75 basis points? We don't know. The anticipation right now is for a 50 basis points. All right, I just explained what the FOMC is going to be up to. All right. The dollar index right now, it is still within that flag pattern. Unfortunately, we need this one to close below 103 today to see any significance in terms of what it is. All right, so we're good right now. I'm just going to let this one run. I'll just make some adjustments for stop losses. We got buy here, and let's make our stop losses. Just about 1.2550 should be good. In terms of target level for the pound USD, you are going to be looking at about 1.26440-ish level, right? Euro USD, you really want to have your, we got triggered a little bit too high on this one here, but you really want to have your stop loss about 1.0775. In terms of target level for this one, we are going to be looking at 1.0850. Okay, this is about 1-to-1 risk to reward ratio that we currently have. On the Euro Yen, our stop loss is going to be unfortunately pretty high, which is up there, but our target levels can be a little bit lower. We're going to be looking at about 149.70 level, which is enough in terms of risk reward ratio. Dollar Japanese yen, this one I think we're going to be looking at 138. So I'll zoom out a little bit. Okay, I think I can get rid of some of the positions, key levels to watch out for. Obviously, if it breaks below 139, we're going to see a lot of drivers going on in the market. But right now, just to protect our positions, we are going to have our stop loss at about 140. And in terms of target level, we are going to be looking at 130, a return towards 138. 138.50, 75 should be about right. Not going to get too greedy on this one here, but the estimation is that 138 could be a potential for the dollar Japanese yen, but I'm pretty happy with 138.50 on the dollar Japanese yen. The sterling yen, this one here is a little bit flat. Be a little bit more careful. I don't know how strong the sterling is going to be, but the sterling yen right now, if it does go down, we anticipate a return towards closer towards 174.25. Risk reward ratio is about 1-to-1 on the sterling yen. All right. All right. What's today's news impact? It's the CPI number. It's the inflation number in the US. It's come in lower than what the market is expecting. So we should anticipate a little bit more of a toned down FOMC tomorrow. Okay. Cool. All right. Any questions that we have? If you have any questions, just ask. But yeah, in terms of position adjustment, I think we are good in terms of our position adjustment. For Euro Yen, we have a short position with the stop loss at 150.95 or basically close to 151. Our take profit level for Euro Yen is going to be at 149.70. The Euro USD, we have a long position at 1.0816. Our stop loss is going to be at 1.0775, about 35-45 pips. Our target level is going to be at 1.0850. If it's strong enough, we might potentially see 1.09 on the Euro USD. The sterling yen, we're looking at a stop loss at 176. Our take profit is roughly about 174, closer to 174.25. For pound USD, we've got a stop loss at 1.2550, take profit level at 1.2640. The dollar Japanese yen, we have our stop loss at 140. In terms of target level, it's up to you, but you can have you do have a few choices. You got 138.50, or you have 138 for the dollar Japanese yen. Cool. We good on this one? Sorry about the platform crashing. I guess I just have to close out a lot of windows, but yeah. So apart from that, it is what it is. We've got trades running at this point in time. So if you're happy with the tally up and you want to get out, it's fine. If you want to get out, you actually don't have to stay in this position. Right now, if you're looking at some profits that you want to take and you're happy with it, close out your profits, be done for today. That's news trading, right? You basically just go in and out. The reason I'm staying in for the trade is because we got that whipsaw that takes both of our orders, which is a risk in using a blocked out range like this, but it is what it is, right? Both orders got taken out, so I'm actually staying in this trade right now because we have time to analyze what we're looking at in the market. So we got our stop losses, we got our take profits. That's all good. Okay. All right. Cool. We good? All right. Let's wrap this session. We're going to end this a little bit early because we've got our trades running. Everything is good. We don't have any other things to look at. Gold here is a little bit unstable. Be very careful with gold. This is the reason why I don't trade gold. If we have our buy stop and order and sell stop order on gold, we're going to be in a huge loss because of that, because the market just moved about $20 just now within the first 50 minutes. Aussie USD, I'm staying out of Aussie USD. Aussie Japanese yen, I'm staying out of Aussie Japanese yen. Dollar Swiss, I'm actually staying out of this one here. But yeah, I think in terms of momentum, just be a little bit more careful, because on the hourly time frame for the dollar Swiss, it's still to the upside. Dollar CAD, we just need to break through a little bit, but other than that, all good. Okay. Euro USD should be in line with what we're looking at. The pound USD just broke through some of the key levels that we need to be taken out, which is the first resistance on the daily pivot. Price managed to break through 1.26, but didn't have a confirmed close. It would be better if we have a confirmed close above 1.26 than for this one here. If it does close above 1.26, swing traders can look forward to a potential return closer to 161.8% at 1.2625. So swing traders could get a good price in terms of getting in on this one here, because if you go for that 127.2%, it's still going to be good. But I think we could see that eventuality of this one returning to 161.8%. Okay. All right. Cool. That's a wrap, everyone. Thanks for joining in tonight. We should hopefully get one like this next month, and hopefully we don't get a whipsaw next month, but this is a pretty extreme whipsaw in the market. I guess the anticipation for the CPI tonight is just so crazy. The market was just in a very tight range, but yeah, that's one of the risks that we need to take into when we have a buy stop and a sell stop orders like that. Sometimes it whips and it takes out both of your positions. Okay, it is what it is, and that's basically what happens tonight. Okay, cool. Thanks for joining in. I'll see you guys soon. Stay safe. Good luck with your trades. Have a great day ahead.